The chairman of the African Minerals Strategy Group, Dele Alake, says Africa's minerals have powered industrialization elsewhere, while the continent's economies remain under-industrialized. He stated that the paradox must end. The vision must be clear to move from extractive dependence to transformative industrialization.
And this one, the revenue for the government is going to be around $500 million.
Breaking news from Africa is sending shockwaves across the globe. Nigeria, the powerhouse of West Africa, just made a bold move that has America and the world stunned. They've decided to keep their $500 million lithium treasure lithium that powers the world's electric cars, smartphones, and tech industries. This isn't just about money, this is about control, power, and the rise of a new global player. Today, we uncover why this decision could change the future of technology, energy, and global politics forever. Stay tuned, because what Nigeria just did could reshape the world.
America is in shock. News from West Africa is shaking the global tech and energy industries to their core. Nigeria, one of the continent's rising powers, has made a bold, unprecedented decision to retain full control over its lithium reserves, a treasure estimated at $500 million. In an era where lithium has become the lifeblood of the global economy, fueling everything from smartphones to electric vehicles, this decision is being hailed as a masterstroke of economic sovereignty, while simultaneously triggering a ripple of disbelief and concern across Washington. The United States, long accustomed to relying on African resources for its technological and industrial ambitions, is now facing a new reality. No longer can they simply count on acquiring critical minerals without navigating the political, economic, and strategic ambitions of African nations themselves. Nigeria's move is more than just a resource management decision. It's a declaration of strategic independence, a statement that the nation intends to assert itself on the global stage in ways previously unimaginable. For decades, the world has been addicted to lithium. Lithium-ion batteries have transformed industries, powering everything from electric cars to grid-scale energy storage. As nations around the globe scramble to secure supplies to maintain technological dominance, the stakes could not be higher. The United States, in particular, has been aggressively pursuing sources of lithium to fuel its domestic EV industry and to secure technological superiority in the decades to come. However, Nigeria's recent decision has thrown a wrench into these plans. This sudden assertion of control by Nigeria is being interpreted as a direct challenge to the traditional patterns of global resource extraction. Analysts and political observers are scrambling to understand the full implications. The move signals a broader trend among African nations, a desire to not just supply raw materials, but to actively leverage them for economic development and technological advancement. Nigeria's leadership, by choosing to keep its lithium in country, is signaling that it will no longer play a passive role in the global economy. What makes this decision even more remarkable is the timing. Global demand for lithium is at an all-time high, driven by the surge in electric vehicle production and renewable energy storage. Analysts predict that the global lithium market could triple in value over the next decade, making Nigeria's reserves a geopolitical prize. By retaining control, Nigeria is positioning itself as a major player in shaping the future of energy technology, rather than a mere supplier of raw materials. The implications of this are profound. Countries that previously expected unfettered access to Nigerian lithium may have to rethink their strategies entirely. The United States' reaction has been immediate and intense. Sources indicate that Washington has dispatched high-level diplomatic envoys to Lagos, seeking to negotiate access to Nigeria's lithium. However, the Nigerian government has remained firm. Unlike past resource negotiations, this time Nigeria is not offering mere promises of cooperation or token concessions. The message is clear. Nigeria's lithium is for Nigeria's benefit, to fuel its domestic industries, technological development, and economic growth. This stance represents a significant shift from the traditional resource extraction models that dominated Africa during the 20th century. Economists are already speculating about the potential consequences. If Nigeria successfully develops its lithium processing and manufacturing capabilities, it could leapfrog into a position of technological prominence. Instead of exporting raw lithium for minimal profit, Nigeria could produce high-value batteries and components, capturing much more of the economic benefits. This strategy mirrors the approach taken by countries like China, which transformed itself from a raw material importer to a global manufacturing powerhouse. For Nigeria, the potential payoff is enormous. Economic diversification, technological development, and a seat at the table in the global energy transition. But the road ahead is not without challenges. Developing a lithium processing and manufacturing industry requires substantial investment, technical expertise, and infrastructure. Nigeria will need to attract both domestic and international partners willing to respect its sovereignty while bringing in the knowledge and capital necessary to build this new sector. Yet, the Nigerian leadership appears undeterred. Instead of seeking to sell off its lithium, it is crafting a long-term vision, one that prioritizes national interests, technological sovereignty, and the empowerment of its citizens. Meanwhile, the United States and other major powers are grappling with the broader implications. Traditionally, African resources were seen as accessible commodities for global markets. Nigeria's stance disrupts this assumption, forcing countries to reconsider how they engage with resource-rich nations. The era of unilateral access may be over. Instead, nations may need to negotiate partnerships that are more equitable, respecting the sovereignty and development goals of African states. This represents a profound shift in global geopolitics, one that could redefine the balance of power in the 21st century. As the story unfolds, the global business community is paying close attention. Investors are monitoring Nigeria's policy decisions, eager to understand whether the country's strategy will bear fruit. International tech companies, which rely heavily on lithium for battery production, are recalibrating supply chain strategies, exploring alternative sources, and considering long-term partnerships with Nigeria on terms that respect the country's newfound assertiveness. This is not merely a local story. It has implications for global markets, technological development, and international relations. Nigeria's decision also carries symbolic weight. It reflects a broader awakening across Africa, a realization that natural resources are not just commodities to be exported, but assets to be leveraged for national development. By keeping control of its lithium, Nigeria is sending a message to the world that African nations are ready to assert their agency, chart their own economic futures, and participate as equals on the global stage. This has the potential to inspire other nations on the continent to adopt similar strategies, accelerating Africa's rise as a global power. For the United States, the shock is both practical and strategic. Lithium is critical to maintaining technological superiority, especially in sectors like electric vehicles, renewable energy, and consumer electronics. Losing preferential access to Nigerian lithium could create supply bottlenecks, increase production costs, and compel American companies to diversify sourcing strategies. It is a wake-up call, highlighting the limits of relying on traditional resource extraction patterns and emphasizing the need for genuine partnerships based on mutual benefit. Experts warn that the geopolitical consequences extend beyond economics. Control over critical minerals like lithium has become a matter of national security. As countries transition to cleaner energy sources and electric transportation, those with secure access to lithium hold strategic leverage. Nigeria's decision to retain control thus positions it as a key player not just in the African context, but in the global technological and energy landscape. The country is moving from the periphery to the center of one of the most important economic transformations of the 21st century. Nigeria's leadership has been deliberate in framing this decision as part of a broader vision for national development. The country is investing in education, research, and infrastructure to ensure that it can extract maximum value from its resources. By controlling the entire value chain, from mining to processing to battery manufacturing, Nigeria aims to capture the economic benefits that have historically flowed elsewhere. This is an ambitious, forward-looking strategy, signaling that the country is ready to compete on the world stage. Critics, however, caution that the path is fraught with risks. Developing a complex industrial sector in a developing economy requires careful planning, strong governance, and international cooperation. There are concerns about potential bottlenecks, technical challenges, and political pressures that could derail progress. Yet, the Nigerian government appears committed to overcoming these obstacles, emphasizing sovereignty, strategic foresight, and long-term planning over short-term gains. The global response has been a mix of admiration, anxiety, and recalibration. African nations are watching closely, inspired by Nigeria's assertiveness. Tech companies are reassessing supply chains and partnerships. Governments around the world are reevaluating resource strategies, realizing that past assumptions about easy access to minerals may no longer hold. The ripple effects of Nigeria's decision are profound, touching everything from international diplomacy to industrial strategy to economic development. Analysts note that this moment represents a turning point. For decades, resource-rich nations in Africa have faced pressure to export raw materials for immediate profit, often at the expense of long-term development. Nigeria's decision disrupts this pattern, demonstrating that strategic foresight and control over critical resources can yield far greater benefits. If successful, this model could redefine resource management strategies across the continent, empowering nations to leverage their natural wealth for sustainable development. In Washington, policymakers are taking note. The shock is not merely about economics. It is about a shift in global power dynamics. Nigeria's assertion of control challenges assumptions about the United States' ability to secure critical resources on demand. It underscores the need for nuanced diplomacy, respect for national sovereignty, and creative strategies to engage with rising powers on equitable terms. This is a lesson in humility, highlighting that global influence is no longer guaranteed by historical dominance or economic might alone. Meanwhile, the story resonates deeply within Nigeria. Citizens see their government taking a bold stand, prioritizing national interests and long-term prosperity over short-term gains. The decision has the potential to unite the nation around a shared vision.